Hi, good morning and welcome to Power Breakfast in the Mumbai News Centre. I'm Pavitra Parekh and with me is Mangalam Malu. Mangalam, we were talking about how we had a good start of the year yesterday. So yesterday was another good day, on the basis of that tax rate review news that we got. So we saw the Nifty and Sensex at 4-month highs. But if we talk about the global picture, that is not looking good today. We, of course, do have the Fed rate decision tonight, where we are expecting a cut. So let's see how that goes for us.
Absolutely. Let's see how that goes for us. Just about 300 points away from an all-time high for the Nifty. So that would be something that the street will be keeping an eye out on. And remember the fact that there is expiry just 2 days from now. So there will be a lot of short covering because we are higher in trade. So all those guys who had taken bearish positions may want to cover that position. And once they do that, the market will obviously move higher. The big data point for me was that, the FIIs and the DIIs, both of them bought in the cash market yesterday. And despite the global picture looking a little shaky, the SGX Nifty is actually indicating a positive start. So on that note, actually, let's take you through all the top stories that we're tracking this morning. Wall Street retreats from record as S&P and Nasdaq snap a 4-day winning streak ahead of the Federal Reserve decision later tonight. Asia starts the day on the back foot.
Days after the Supreme Court landed a 92,000 crore rupee blow to telecom companies, the government decides to set up a panel to help mitigate the stress. No clarity on whether the panel will take up the issue of adjusted gross revenue yet.
Indigo places an order for 300 aircraft with Airbus, marking one of the largest orders from a single airline. This move will bolster its international operations.
The political slugfest in Maharashtra continues. The BJP state legislature party meets today amid a continuing standoff with ally Shiv Sena on the government formation. The Sena called off a meeting with the BJP scheduled yesterday over Fadnavis rejecting sharing of the chief minister's post.
Right, before we move on with all the news this morning, let's take a look at how the Asian markets are faring. They're on the back foot, declining in early trade ahead of the US Federal Reserve's interest rate decision. Remember, developments on the US-China trade front will also be monitored as reports suggest that the Phase 1 trade deal may actually not be signed in November's summit in Chile. So as a result of which we have the Japanese index lower, the Korean index, the Straits as well as the Taiwanese indices, all of them are lower, getting a weak handover from Wall Street and uncertainty on the trade front and ahead of the US Fed decision. But despite all of that, the SGX Nifty, that's the one that should come up for you, indicating a positive start, outperforming the globe, a mild uptick, but the street will take that in light of the way the global markets are right now.
All right, let's also take a look at how Wall Street fared then. US stocks ended lower a day after the S&P 500 scored a record close. Now, investors just focus on earnings and also awaited the outcome of the Federal Reserve meeting, which is scheduled later tonight. So the S&P 500 and Nasdaq both ended lower, snapping that 4-day winning streak. The Dow Jones also ended around 20-odd points lower. We now have CNBC's Eric Chemi to get us a wrap of everything that transpired on Wall Street.
U.S. stocks fractionally lower as investors await tomorrow's Fed meeting. The Dow and the S&P flat and the Nasdaq falling just 49 points. Americans are feeling less confident about the economy. That's according to data from the Conference Board. In October, consumer confidence dipping to its lowest level since June, as Americans express some concerns about business conditions and job prospects. Lawmakers grilling Boeing CEO Dennis Muilenburg today on the anniversary of the Lion Air crash that killed 189 people. It's the first time Muilenburg faced Congress since those 2 deadly crashes, killing almost 350 people, forcing regulators around the world to ground all 737 MAX jets. During the tense hearing, Muilenburg admitted that Boeing's safety assessments for the MAX fell short. A number of top Joule executives, including its CFO, getting ousted today as the company's new chief executive attempts to reorganize his management team. Joule intends to cut about 500 jobs before the end of the year. The shakeup comes at a time when regulators are cracking down on the teen vaping epidemic and investigating the cause of a deadly vaping-related illness. That's the action from the U.S. market. Back to you in Mumbai.
Eric, thanks a lot for taking us through all of those details from the U.S. market. But the main trigger for the U.S. markets will be the central bank's decision, which is expected later tonight. Now, they are expected to lower interest rates by 25 basis points when they announce the decision. This would be the 3rd time this year that the Fed will cut interest rates. However, investors will also look for clues about what the Fed's policy decisions will look like in the future. Meanwhile, President Donald Trump launched a fresh attack on the Federal Reserve, saying that it needed to follow other nations with negative interest rates. Trump took to Twitter to say, and I quote, that the Fed does not have a clue. We have unlimited potential, only held back by the Federal Reserve. End of quote. We now have CNBC's Steve Leisman to tell us what we can expect tonight.
Markets are pretty clear on what the Fed does this week, but the outlook gets murkier beyond that. 79% of respondents to the CNBC Fed survey look for a 25 basis point rate cut to be announced by the Fed. That would bring the funds rate down to a new level of 1.5 to 1.75%. But on average, the survey shows another rate cut is not expected until February 2020. Only 37% forecast a rate cut in December, so the majority banking on a pause. By the end of 2020, the funds rate goes down to just 1.4%, which is to say the market is not fully convinced of any more cuts after tomorrow. John Donaldson, director of fixed income at Haverford Trust Company, writes in response to the survey, quote, after the next cut, the Fed funds rate would re-enter the zone where there is no evidence that further cuts help the economy. If ultra-low rates and negative rates are such a panacea, why aren't Japan and Germany growing at 6% rather than teetering on recessions? While they're uncertain of future cuts, respondents are increasingly concerned over the effects of the trade war and global economic weakness on the U.S. economy. The chance of recession in the next 12 months stands at 34%. That's the highest level since 2011. But the base case of respondents, the U.S. continues to grow, just more slowly. 2.9% GDP growth in 2018 is seen giving way to 2% growth this year and just 1.75% next. Joel Naroff, president of Naroff Economic Advisors, writes, the most critical issue facing the economy is the trade war, and interest rate cuts will do little to change the course of growth as long as the threats of tariffs persist. 76% of respondents say tariffs have resulted in higher prices for consumers, and 60% have cut their growth forecast for this year and next due to the tariffs. 46% say tariffs have lowered consumer spending. So the murky outlook for the Fed and the economy seem to flow directly from the uncertain outlook for tariffs and their impacts on the U.S. and global economies.
All right, so on that note, let's also listen into what markets are expecting for the Fed and what market experts are factoring in.
You know, I wouldn't characterize it as a hawkish cut, actually. I think chances are it's going to be not a terribly exciting Fed meeting. If they give a cut, as is very likely to be, and then they go into pause and data-dependent mode, I wouldn't characterize that as hawkish. I think the markets are pretty much expecting that, as your survey showed as well. I think the only way to characterize this as a hawkish meeting would be if Powell really comes out and said, this is our mid-cycle adjustment done. Don't expect anything more until the economy really does get worse. And I think that's roughly right. You know, outside a recession on the horizon, they've never really gone beyond 3 cuts as a sort of mid-cycle adjustment. But it's much more likely that they keep it vague enough that the markets kind of just move on.
I think the market would react negatively to it short term, but then maybe recognize that the fear of recession shouldn't be as strong as it is, and maybe that's a setup for a market to continue to push forward. In my estimation, I think the Federal Reserve is going to lower interest rates simply to stay on pace with the rest of the globe, to not change our competitive position, rather than need an absolute reduction in interest rates here in the U.S. economy. And they'll walk that tightrope of trying not to disappoint the markets, but trying to remain conservative.
I think it's more about how do you position for December? How does Jay get out of a few messes? And one of the messes is what happened with QE that they don't want to call QE. So I think that's going to be the one I watch the closest. They've started to expand the balance sheet, $60 billion in outright purchases plus the repos. I think he's got to do a little Houdini act on that and probably give us, you know, it's just my best guess, language that says something like we're going to act appropriately, which isn't dovish, isn't hawkish. It's sort of down the middle of the road.
I think people first have to recognize we have high rates in the U.S. and that you have to get used to this idea that 0 and 1 is kind of the regular rate. Second of all, if Europe is at 0 and negative, there's a bunch of big multinational companies that can borrow at 0 in Europe to fund their operations. U.S. companies, U.S.-only companies, don't have that luxury. So they're put at a competitive disadvantage. So yes, if Europe lowers their rates, it forces us down.
Really really what we have to hear is whether or not Powell signals that this is the end of the mid-cycle correction. If so, I think you're going to have a lot more upward pressure on the 10-year, and that not only affects the bank sector, the utility sector, but I would argue that it also affects high-yield credit and high-grade credit.
All right, and it's all about the Fed, and that's what the European markets also are monitoring. Also, they're monitoring earnings coming out there and the developments in US-China trade discussion and on the Brexit front. As a result of which, the European markets ended mixed, mildly changed. The UK looks set to hold a general election in December in a bid to break the Brexit deadlock in the parliament. The main opposition Labour Party leader, Jeremy Corbyn, has announced that he was satisfied that conditions have been met to support sending Britain to the polls before Christmas. So let's see how that pans out. A lot of moving parts in the European region.
Okay, let's shift focus now to the currency space. The dollar index holds steady against a basket of major currencies, while the Japanese yen strengthened against the US greenback ahead of the Fed decision later tonight.
In the world of commodities, oil pared losses amid expectations of a rise in US crude inventories and fading optimism over a US-China trade deal.
Okay, it's time for us to slip into a short